I'm James Turk of Gold Money. I'm here with Félix Moreno de la Cova. Félix, you're a foreign exchange trader, commodity trader, equity trader. You follow the markets closely. I want to get your insight on what's going on. We had QE yesterday announced in the United States. We had a former QE a few days ago from the ECB. Gold prices responding. We're at 1770 as we speak. Silver prices responding. We're at 34.5. How do you see the markets at the moment?
Well, James, as you know, September is the best month for gold seasonally. So even if the Fed and the FOMC hadn't given it this boost, it would probably have gone up. And after almost a year of consolidation in the gold price, I think we're seeing the perfect setup for much higher prices very soon, for another big run up in the bull market that has already lasted for 10 years. And if the 70s and the 80s are any indication, will probably last for another 10.
Yeah, let's talk about the gold price both in terms of the dollar as well as in terms of the euro. Over the last couple of days with the FOMC announcement, actually even before, the dollar index has started dropping. We're back down under 80, which has in my mind sort of been an important benchmark because we've been over 80 for so long, and now that we're back at 79, it's an indication that the dollar is starting to get weak. And therefore the gold price looks even better in dollar terms. Are you expecting the dollar to continue to fall here?
Not really. Not in the short term, at least. I think a much bigger impact is what's been happening in Europe with the bailout for Spain, Italy, and the new liquidity measures from the European Central Bank. I think in the short run, new liquidity sort of relieves immediate tension and therefore lifts up a currency. Because what we're seeing right now is a big competitive devaluation between the major currencies. They're all racing to print more. Yeah. And obviously in the long run that weakens the currency tremendously and will eventually lead to the downfall of all fiat currencies. But in the short run, there's such a relief in the markets. There's this whole risk-on, risk-off mentality that has now lifted the euro up. I don't think that's going to continue because as soon as the details of the liquidity measures and all the new money injections, which is what they are, start coming out, markets are going to see that the underlying situation has not been resolved. They bought a little time, and even though the fiscal situation in the US is terrible and comparative to what it is in Spain, the dollar has been around for longer, and it is the world's reserve currency. So I do think the euro will fall first.
But if I can restate what you're basically saying is that at any moment in time for a period, the dollar might be falling against the euro and the euro rising, but as attention shift to another area or you get a bounce off of a bottom or the market has reached a psychological extreme, you're going to see the dollar rising relative to the euro. So you get this bobbing up and down between the two of them, but the more important thing is that relative to gold, both of them will be losing value and that the gold price will be rising regardless whether you look at it in euro terms or in dollar terms.
Most definitely. People who only look at the price might think that gold is high right now. It is very far from it. If you understand the gold stock flow ratio, which is around 70, and if you understand how gold works when rates are negative, interest rates are negative, people don't realize how extraordinary that is. Yeah. And it's a situation that was supposed to be emergency, one-off, and it's already lasted for a few years now.
Yeah, real interest rates are negative, meaning if you deposit 100 euros in your bank, at the end of the year you're going to have maybe 101 euros, but only 95 euros of purchasing power. Exactly. You're actually losing money by holding euros as opposed to holding gold.
Exactly. We're going to see oil going up, we're going to see agricultural commodities going up.
Well, they are going up, and the drought is a contributing factor, but they would go up anyway in your view because of the money printing that's going on.
Well, they've already gone up a lot in the last 10 years, despite the fact that CPI hasn't gone up that much. In the past 10 years, American CPI has gone up by 29% cumulative, and some prices such as oil, cotton, rice have gone up by 300%, and obviously precious metals have gone up by even more.
Yeah, the dollar price of gold is still about $150 from its record high that was made just over a year ago. But in euro terms, gold is flirting with new record highs here. Are you expecting to see new record highs in euro gold by the end of the month?
well, we've already had them once and they never come in once. If we've seen gold per ounce, per troy ounce at over 1350 euros very recently, we're probably going to see it at 1360, and we might see it at 1400 not very far from now.
What about silver? Are you as bullish as I am on silver? Because I believe the ratio is going to fall from the present level in the 50s to something maybe in the 40s or 30s over the next several months.
I'm extremely bullish on silver in the long term. I think we'll see $50 per ounce again relatively soon, maybe before year end. However, it is very volatile. And traders have to use kids' gloves when they trade silver.
Yeah. Well, I'm not in favor of trading. I'm in favor of accumulating, as you know, a dollar cost or euro average basis. Every month you just continue to accumulate the metal. But, I take my hat off to you guys who are traders, because I know that you're in there trying to benefit from price fluctuations. But clearly the way to play it from a trading point of view, and obviously from an investing point of view, is to be long gold, be long silver.
Of course, and I do both. I accumulate as well, and I think accumulation is the best strategy. And obviously, a dollar cost average silver strategy will do very, very well in the next 10 years. I'm certain.
I agree. Well, thank you very much, Felix. I've been speaking with Félix Moreno de la Cova. Thank you, Felix.
Thank you very much, James.
Visit us at www.goldmoney.com and click on the Sign Up button to open your free holding.